SPY just hit trend line.
Who's going to chat first?
Options
Whoever
Pro.
chats first is a goat.
Yeah, you got this little swoop. And
Swoop-de-doop and pull, and your shoes
Yeah.
all looking cool.
Let's see one of these.
You go forward and back, left or right. Loop-de-loop, then you pull them tight, like bunny ears or a Christmas
Whoa.
bowl. Lace them up and you're ready to go.
We'll see if this is our path of trajectory, or do we do this? One of these. A little back test, and then
SPY gonna diddle in the middle? Yeah. Again, you have SPX is pinned between two levels of gamma right now. I mean, and you're seeing no significant increase or calls or puts. It's leading to pinned and slow price action.
this is not looking good because
We are live, boys. We're back.
I think we're going lower. I think we're going to follow the blue trajectory towards 68.60 lows of the day. Maybe not, but
Holy LLY. Remember this one from earlier this morning? Damn.
yeah, I'm short ES from 93.25. My stop is now break even. Cinny to the penny. That's where I'm at.
LLY just fired a 5-minute squeeze on the previous candle.
I will cover my first. I got a 5 lot on. I will cover the first one at 84 on this 50 period on the 5-minute chart.
Dude, is all healthcare just going to continue to like poppy right now? Pfizer
I did
going
get
out decent.
All right, there we go. There's a fill at 84.25. Leaving 3 runners. There's 83. There's 10 points for you. Hit them with a hammer. Can we get them down to 80?
Drop it, low girl. Drop it, low girl. Drop it, low girl.
There you go. There's 10 points on the trade if you were in it.
Oh! Dump it for the mans.
Let's go a little more.
Dump it for the mans. Oh! Q's weaker. Is there a tech name that's selling off heavy right now?
Put a stop in now. Stop is going to be at 90. I repeat, stop at 90. Never let a winner turn into a loser.
Oh, NVIDIA.
Stop 3 points in profit. 3 contracts left.
NVIDIA selling. Yeah. I was like,
Izzy, I hear you. Thoughts on Amazon? Let me pull it up. I got to switch screens. Hold on.
Don't touch it. Sell options. Don't touch this thing.
Amazon. Ooh. Let me pull this up. Let me clean up some of these.
There's 3 gaps on the daily.
On Amazon?
Yeah, so it's
so let's go big time frame.
Yeah,
let me know
it just entered
if
into the lower gap. Then you have another one between 213 and 220. Then you have another one between 226 to 232. The downside gap takes you to 195, which is where I'm looking for it to go to.
So,
potentially
yeah,
bounce.
You got the gap at this candle right here. I don't know if you guys can see it. The high of this candle to the wick is 194.69. So I'm going to put a...
You said 69.
A little horizontal line right.
I'm going to say Google as well.
Okay, so there's your gap. What's that?
Google just made a new low of day when the video was selling as well.
Yeah, let me switch it over to the watch list. Oh, yeah, Google below 310. Rugged it. So here, on Amazon, guys, this is what I'm thinking. This is ugly, by the way, because you have a massive area of overhead supply above 210, basically. And this goes back for almost a year. So you failed. You broke these trend lines. You broke the 200. way gap below that. You tried to rally back up to the base of this, which is right around 211. You failed. So your first stop is going to be 194.69, which is the gap fill. But ultimately, if that doesn't hold, you're kind of in no man's land. Let me go to the weekly. I honestly think, I know, what does that say? 161.38. Don't rule that out. I'm not saying we go right to it, but like, what's going to stop you? I mean, okay, maybe this. I think you need like a zigzag pattern now that kind of is going to look like. I think you do kind of this, right? Like here, bounce, and then I don't know. It's probably something like this, and then there. But I think that's. I mean, realistically, you should bounce off this gap fill. So I'm just kind of drawing this kind of weird, but it really wouldn't look like that. It'd be just kind of more up, retest, fail, then you reshort this gap, probably like this, really. But I don't think that's crazy because you've done so much damage on the weekly chart. Like you need to get to a key level support. And what else do you have down there? The 200 on the weekly. So I think that's I mean, I certainly wouldn't just want to buy Amazon here. I don't think that's not yet. For like a long term, if I'm going to be in this thing like as a swing, like a long term, like buy leaps and stuff on it, I'm not buying it until it's down here. And you really don't have anything to help you between now and then. Like there's just the structure gets thin down here. So, I mean, I guess you could argue maybe got these highs at 188. But the problem is like you kind of were already here, like you were there, then you come back during the April lows, you rallied all the way up, and you didn't do anything with this top. It's more distribution-like, and that's a lot of distribution. So, I mean, could you get maybe a rally back to this trend line? Maybe it's kind of an ugly one, but I don't know. 161, that's what I think. You could probably, honestly, like, if we get any rallies, I'd be selling call spreads or calls on Amazon, and I'd probably be doing that on a lot of the tech names on any rallies. Tesla, I think now probably like 450 is a secure level you could sell calls against. Q's is probably 430. But I think Amazon, there you go, 188.65, 194 is your gap fill. Those are kind of your smaller levels on the way down, but I think ultimately you'd probably go to that. And then you could, here, let me turn these auto trend lines off real quick because they get a little messy. Where's your big level of support? Probably this, right? What does this look like? Look at that. All right, so when I draw this trend line, if we hold here, that's probably a good spot actually. You got the gap fill and you got the trend line like 193 on the weekly. Here, you got a nice touch there. So watch what we do here. This is your first area of a bounce. You could like come into here. You could do this now that I see this trend line. Come there, bounce, and then you might have like a break and then retest and then come here. That could be another path. If this doesn't hold, like if we like bear flag here, we start going sideways at the trend line and start like flagging out, you better believe this is going to snap this way and then probably retest the trend line. So it's kind of what I see in Amazon. Google, I'm going to pull that up just why we got the majors. This is also not good because now you're breaking below the 9, which you've been above for how long now? You haven't had a close below the 9 period on Google since June of last year, and now you're closing below the 9. So what else? Netflix, I've talked about. I love Netflix here. This is my spot for Netflix right there. Set an alert on your chart. 67 to 70, I think, is going to be a great level with the rising 200 weekly moving average below you, and extremely oversold on the RSI on a weekly time frame. I will start to look for building a position down here. NVIDIA, I don't know. Another rejection of the 193. You got earnings coming up though, so I'm not doing anything with that for now. Tesla. For those that are in the Discord, Casey, I posted that chart in there on Sunday. What did we do? We did exactly what I said. I said you broke trend. This week, you've retested the back of the trend line in the 9 weekly, and you wicked right against it at 434, almost exactly to the trend line, and rejected it. So I think the path comes back into Tesla into this section. Somewhere in the mid threes, be my guess. 363 is the 50 weekly. Because on the daily, it's not constructive. Unless you get back above trend and back above the 50. You got to get back above 445 on Tesla to get me to change my bearish tune on that one. And then I would be interested in a long on Tesla over 445. Qs. Somebody said Qs
Vest
490s.
Vest is neither shares or options. It's perps instead. Perp contracts. Kind of its own market.
Yep.
But obviously tied to the underlying share price.
There you go. ES continuing to rug a little more from that level. Apple, let's pull that one up. So I said this earlier. You got this trend line right here in Apple on the daily. You're smashing through it. They tried to support it a little bit on the intraday right here, right at like 262. You had a small dollar bounce or something, but yeah, if you're trading this thing, look for maybe the trend line. But I mean, ultimately, like all these stocks are going to be great buys at some point. Like Microsoft, obviously a great buy down here. I started building a position in here in Microsoft in the last week or so down at this trend line. There's been ample opportunity to sell calls in these names for quite a while in the last 2 months. You could have sold call premium in these as they broke below the moving averages. You know, some people are like, oh, I don't want to sell call premium. Well, you do want to sell call premium. Covered calls are great as long as you're below the moving averages, the key ones, because those take a long time to develop. And if you're below them, you can usually pick up some good premium. Now, do I want to sell call premium when it's ripping and it's way above the 9 like this? No, because you're going to get called away. But when you start doing stuff like this and you break below some key averages, this is when you want to sell call premium, is like in these type of areas. So you got to be diligent on what you're looking at. But Microsoft, I think, looks good. The other one I still like down here is ServiceNow, which is actually in a bad tape, is up 2%. So I like this name here. Been absolutely obliterated. I mean, I think it's the most oversold I've ever seen the RSI in this name since it's been a company, which it is down. It got down to 21. So ServiceNow for me, I like it. I like the risk reward here at right around this 100 level, for a good spot to initiate longs in ServiceNow. So obviously, if you want to trade it, I would say you could buy it here and just put a stop below this week's low, which is $98. So you got about a $4 to $5 risk. If that gets taken out, then you could reassess, because you lose this trend line, it's opens you up for lower for sure.
I saw somebody say what this space does not tell you is they play options. Casey says when he plays options, so does Will. I don't really trade options except for selling them, but I don't play them personally. I used to.
Yeah, I mean,
I
sell
trade them pretty consistently. You guys trade them every day, pretty much.
Yeah, I mean, I do. Like on Casey and I both, we sell spreads on the day.
I took options this morning on SPY. I said I was in those puts, baby.
Oops. I do more anything. I do a lot of premium selling and like risk reversal type trades, or sell puts and buy call spreads, or sell call spreads and buy put spreads, you know, something like that.
By the way,
Try to
your
do it.
internals are making new lows right now. Valdi and Valdi Q.
Here's the path. Let me pull this up. Where's the path going?
Bye,
Lower.
bye.
There it is. So we got to go one of two directions.
Let's go check if there was a spike in anything. Nah, just calls falling off, but still kind of flat-ish. There was a spike, a little small spike in put premiums at 310 Eastern. Other than that, nothing too
Ryan said
significant.
somebody asked Frank where trend days usually close.
Frankie will tell you they close them at the lows.
Frankie.
Close at the
Yeah.
lows.
No,
Hey, go! We gonna see new low.
unless it's end of the month.
There you go. Anybody, I said the short right there, 93. This almost 20 points now.
How much you want to bet? Q's making new low of day. Walmart's making a new high of day. Let's see. Yeah, seems to be at Costco. Looking to see if it can close over 1010 today. That'd be nice. Q's will take out the lows before anything else. IWM and SPY still have a little ways to go. Go get that money. Don't stop. Oh. Me and my grandma take meds. Oh.
There you go. All right, Cindy. There you go. Just move your stop down. If you got a trailing, trail it down. But you could probably, I'd have my stop at like, I mean, if you want to give it some room, you could go to like 87. Or if you want to get a little tighter, I'd put it like 83. But anybody that thought we were going back to 6,900, you are wrong, my friends. This is that perfect setup where you get let me just go to a 1 minute real quick just to show you. I mean, not only did you have all this bearish divergence kind of set up here, this is probably going to be a low spot that it bounces. Actually, it should bounce against this low here, but internals are super weak. You have a trend day down. You consolidate. You couldn't get off the mat all day. And as soon as we went up to this level, which is these highs from earlier, they just you couldn't get any buyers to step in. So what do? Internals weak, Google making new lows, Amazon weak, Tesla. I mean, they're all just look terrible. All the indexes red, all the sectors basically red. You're gonna roll over. So we can probably delete this one now. So let's do this. Look at that. So now it's probably a bounce to there. And then like this. Or we just straight rug through this, but need a zigzag. So my stop would be like just above this 200, like 82 now. Just keep trailing it. And you know what? If I throw on my the old trend ribbon, guess what? This thing was probably, it said sell it back here. These are just continuations. Counter trend rally, sell it, never flip back to. That's the other thing. Like, look at this indicator. It was green from down here, flip back to red, and never got green. This should have flipped back to green if we were going to go back up, and it never did. Never went back green. It's probably red on the 5-minute all day. Probably never green. You had one there. It flipped to green here. You could have rode it for a little bit, but I don't buy the green lows in a downtrend. You only look to sell them when you get these.
Jordan,
What's goody?
what chair do you have?
This one is a newer one from IKEA. I have the photo of the tag because I don't have the box anymore. I don't think. Wait, hold on. I might. Give me a second.
Because I'm in the market for a new chair.
Listen, I don't know. I got to find this chair I got at my house. Let me. Oh man, I love this chair. It's got like a leg rest too. It's awesome.
Oh, that's what this one has a leg rest too.
Which I like. I don't remember what was it. This one. I gotta find this thing. I'll send it to you if I can. I gotta go back through.
Secret Lab's good. It's similar to what I have right now. I need something that can just not my back. I mean, I've had back issues for freaking years, and then my prior career didn't really help that whatsoever.
Secret Lab's too hard. I have one in this office, and I don't love it. It's just okay.
Stop telling me Herman Miller. I'm not.
I love the autonomous AI chairs, but
$2,000.
Honestly, here, this one's really nice too. Where's
They could really break this.
Oh, where's the ticket?
Frankie, hit him with the hammer. Let's go, buddy.
I mean, if it breaks here, if we get through with momentum, it'll just freaking die.
Yeah, they're going to go press the lows. It would be my guess. They'll try to close them there. They should.
It would be a tax write-off. That is true. Google selling.
I got you, Casey. I'm sending you the link. It might be in Spanish because it's from the IKEA in VR. But,
that's fine.
But you could probably find it at home, of course. This is really nice. I've actually I've never sat down all day and had as little issues as I've had. Like I've been comfy all day, every day on this thing. So
I gotta find this chair. I can't think of where I got it from though.
If I
do like it. It's got like a good backrest in it, and it's nice.
New low day.
There it is.
Oh, we finally built a 15-minute squeeze. Look at that.
Blast it.
Didn't even get that on,
Frankie. I just want to see it get rugged.
SPY and IWM, not yet. Definitely cues. Google selling.
You ever seen a price start to go this way? Just kidding.
What's NVIDIA? NVIDIA, not really. I guess mainly Google leading this thing down right now.
Yeah, Google, Apple, NVIDIA.
What's Meta doing?
Meta's probably getting crunched too.
Nothing too much. Google, I think, is the worst recently.
Ooh, Meta don't look good either. Honestly, that thing's been getting smacked all afternoon. Yeah, not good. Not good at all here. I mean, here, look at this trend line. Snapped it right there. Right at 88.50, and then see you later. Probably your next spot will be this one. I mean, you can see this getting drawn in there automatically. These trend lines get auto drawn. But I mean, probably comes down here at some point to test this lower one. Looks like a Tetris game in here. Which indicator are you referring to? The ribbon? You can find it in TradingView. It's called the GK Trend Ribbon Ultra Tight. And I guess if I'll take you to like a hourly, just show you what it looks like. It's just, I mean, it's a follower indicator, but I think like even like yesterday, like when I just kind of look at it for direction, and then also when I see like when we rallied up and then I got that sell signal on, was that Tuesday or Monday? It never flipped back to green. So I only want to take longs when it's green, and I'm only looking for shorts like on the big time frames when it's red. And what's really funny is if you go out to the daily, look at how long ago in ES this flipped red. Way back in November. And guess what? It's never been green since. Still had a sell signal way back here. Yes, we went higher, but this just tells me like don't chase it. Don't look for longs.
Well, SPX and SPY haven't made a lower low yet, but Q's did.
Dude, that Herman Miller chair is $1,600.
And this will on the 4 hour. This is going to flip back to. And when you're in a downtrend, when you get a buy signal, you want to look to like reshort these areas because you're in a downtrend, right? Does that make sense? You get the buy signal, then it flips back to sell for continuation. Same thing if you go when you were long, right? I'll just use like you get these short term, like you get a sell, and then when you're in an uptrend, when you trigger the buy signal, that's when you want to get back long for continuation. Same thing here, right? Buy signal, continue back long because you're above these moving averages. All these moving averages are going up to the right. Where are we at in relation to the moving averages now? Not good. Price is below there. So, anyways.
I think we got George up here. What's up, George?
Almost there. 62.25. Come on.
Camera.
Let me fill some runners down there.
Auction
fill this
Ninja.
last-
Let me
got
go
two
check
left.
that out.
2 runners left to fill at 62.25 for a nice little 30-point trade. 30-point in ES. Let's go. I gotta find this chair. I just don't know what it was called. I'll scan through my email. What did I get it? Like November? Yeah, Meta dying now too. That's not looking very good.
Think you just went any low?
How much is this chair? Man, this is one of the top rated chairs. It's $119. This is more my tax bracket.
There you go.
Y'all sending
There he
me.
is. What's up, George?
Yeah, I couldn't. There were so many people on stage. I didn't know that my camera wasn't working.
Oh, you're good. You're good. No worries. How we doing?
Good. How about you?
Pretty good. Just managing the sell-off day, you know. I didn't
Yeah,
actually
I
take any
mean-
trades personally, but I'm curious on what Prospera's saying about today.
Yeah, I mean, we've been in. It's hard to do this one perfectly, but we've been doing like I think we started the week like 50% above the market, and we're on an annualized basis, and we're like 70% now. So yeah, we nailed the Crocs earnings, and it would have been a really good week if ASTS did not dilute, and/or everybody didn't freak out about dilution, especially like a growth company. I know, like it shows how retail driven the market is, because retail just has seemed to agree that dilution is always bad. But like a growth company securing like $300 million to launch more like satellites and put more service, like I don't really think that's a bear event.
That's a good thing. I know. I've been watching ASTS too, and some of the days that it's had down they've looked nasty in terms of like percentage, but I don't know. For the most part, we've been holding these previous all-time highs, which we're now actually trading under, and hitting more of the median of this bigger time frame range that we're in. But that's what I've been keeping an eye on. I was thinking we might try and move higher from this last like dip we took, but looks like we want to keep moving lower. So I don't know. We'll see if we hold up around that 76. But what's the option sentiment looking like there?
Good. I mean, it continues to be one of our like best looking stocks. I mean, I just added AppLovin as a trade alert though, like, and it was like the AI was liking that. I mean, 81's a little low from where it's been. That's a bit of a dip. But yeah, like at this price, where is it? At $80, like it can like launch off this price pretty well. But I mean, I would honestly wait until CPI. Like, I think that's good. Like, I think the market and growth stocks could get really, like, after today's kind of report, I think like either way, it's a little risky, right? Because if it comes in low, I think the market starts to get very bearish on interest rate cuts. And then if it comes in high, the market just might not like that for different reasons. So yeah,
You think you're talking on like a growth slowdown type scenario if we get a low CPI that the Fed's behind the curve? Is that what you mean?
yeah,
Okay.
definitely.
Yeah.
So yeah, I'm watching that, but like there's a couple of these like I like AppLovin is just so low relative to where it's been.
I got it pulled up right here, and to your point, look at where we are. I mean, we got a nice trend line on the weekly that's right here. We need to get some support here and not slice through this, but you do have some horizontal area of support here, and I bet you if you fib that.
And if you think about like where the business has grown since then, earnings have grown, right? So theoretically, this should be a great price with their earnings growth if you're like tracking the weekly back that far, right? They did guide up for the next quarter too.
Yeah, they just had a great earnings.
Yeah,
the price action was a little rough, but
a lot of these companies have had great earnings. The question is, why are they continuing to sell tech? And it's like software is like going out of business in 3 weeks is what it seems like at this point. It's kind of crazy, but there are going to be some great bargains on some stellar companies that if the market continues to sell and maybe this turns into a 10% correction in the broad markets or something like that, there are going to be stocks that are going to absolutely be on sale. They're going to be great buys, to your point.
Yeah, and I mean, the way that I look at it is even if the market's ready to take a bigger dip, people might start, like there's a case for AppLovin as a value stock. I mean, a value growth stock at the very least. Maybe you dump some of your, bigger winners, like SNDK is a stock we really like right now. That's been doing super well. And there's a number of them we've been following also, like TER. Like that a lot too, Teradyne. But it's like, yeah, there's some of these stocks that people might be ready to take their, if the market does dip more, they might be ready to take their gains on and move them back to these, some of these growth names that are solid. They're just in a bit of the dumps lately.
I would agree with you 100% that if you're in a SanDisk or a Micron or some of these names that have run just ridiculous amount, I would look after these runs. These are the ones I would be looking to take profits in and look to reallocate towards something that's down 40, 50, 60% that are good companies that are outstanding, I just pulled this up before you came on, but like ServiceNow, which is still a great company, still has great revenue growth. I mean, this thing is down from 240 all the way down to $100. I mean, that, in my opinion, I think you're getting stocks. This one's like at a really good value.
And I like how the now chart is bottoming out a little bit too. I'm looking at the daily. Like that's the kind of action I like to see if I'm gonna
especially in a bad tape. Like today, the stock's up a little bit. And we got a really bad tape. I think that's like a good sign. You want to see those names start to outperform when you got the NASDAQ down 460 today. So.
Well, yeah, this is the time, George, that you really want to focus on those names on Prospero that are holding up during this market dip, right? That are holding option sentiment really strong. I've always noticed when we have some bigger dips like this, we're down 2% from all-time highs. It's not that big, but it's decent for the market, and then selling off intraday today as well. I've just noticed plenty of times when we've been in this boat where everybody's like, market's looking a little rough here. And then you look at these names on Prospero that are holding up with the option sentiment. What happens? We just end up getting bought back every time. So I think it's worth noting for the audience. I threw the link in the chat. You guys can download Prospero for free and start using it and start checking out. I use the option sentiment the most. It's probably what most of us.
And these are names like you look in the last month or two. I mean, look at the staples sector that has just been absolutely on tear in the last 6-8 weeks as technology has taken a backseat. Staples have been on fire the last 2 days. I talked about this last week. Look at the barn utilities on the weekly. Obviously, that's with lower rates because it's interest rate sensitive, but utilities start stepping it back up to the upside. Very defensive positioning, as well as healthcare has got a decent bid today as well. More doji, but those are the names you got to rotate out of the high flyers, and that's been happening. You've seen distribution and technology in the last 2 to 3 months, and the other names have caught fire. The industrials, basic materials, staples. I mean, we just talked about this. Everybody's favorite company in the world is probably going to $3,000 at some point. Walmart trading new all-time highs at 133. Who would have thought that? I mean, this thing
I was actually like looking at. I mean, I feel like the conversation between Walmart and Amazon like got really wonky because now that I look at I think Walmart is now trading at a higher PE than Amazon, and like
is it now? It might be.
Yeah, and I'm just like, that's fucked. I would much rather, like, all things equal, like, because Walmart is just like a consumer cyclical company, and Amazon has AWS too. Like, there's no reason, like, and I think Walmart was a great trade when Amazon had that, higher PE ratio for sure. But now, like, I saw that recently, and I was like, who's still buying Walmart when like you could get Amazon at a discount, like, and everything else that Amazon does?
Yeah, I mean, even
Ryan loves his Walmart.
He does. This run in Walmart. If I'm trading this thing as a trader, I think you got to maybe another $5 of upside into this top of this trend line, and then maybe you look to fade it because it's getting a little bit parabolic.
It is getting wild. I don't know. I'm starting to be like, oh my gosh, is it really just going to keep doing this? Yeah.
If we do get some broad market selling, eventually they will start to throw everything out, and that will include staples, that will include utilities. They'll just launch everything. That's you won't see the rotation anymore into defensive stuff. What you'll see is they will start to sell everything across the board, like they did in April. They sold everything. So once you get to that, that's when you're going to start to say, when is the selling over, or how low can we go, or what's it going to look like? It's when you see every sector get sold across the board, and every company they're throwing out in the garbage can. That's when you can say, okay, we're getting closer to a bottom. But I think we're in the early phases of probably more corrective move in the broad markets, as I've been saying for the past 2 months.
That's how I'm seeing it. For the past 3 weeks, I've been more short than long.
Yes. Especially technology.
Yeah, definitely tech. But just overall, I think the market, and this has not been true, I'd say, since that April, Liberation Day, like, I'm seeing more downward pressure on the market than upward pressure. And I see that, both in some of the key stock and index level signals, like our SPY and QQQ net option sentiment have been at the floor for that time. But I would also say, the number of concerning macro events, and I would say, the ones that I'm looking at are, you mentioned healthcare. One of the reasons I don't like healthcare is I think things are pretty unsettled in terms of the binary event around these premium negotiations.
Sure,
and there's 100%. So many companies that could go hard one way or the other. Even though I do see some value there, I don't think that's been sorted enough for me to figure out kind of the game theory on that value and how I might understand playing it and the risks associated. But I will definitely say, I think the tensions with Europe and potential tariff issues with them, I think there's the highest chance of another negative news headline around that, as much as we've seen. I think obviously the shutdown, last time we saw it take a little while to really take effect on the market, but I think there's that pressure. It definitely started to weigh it down more and more. And then I think, you've got the kind of confusing economic data that goes into okay, how many cuts are we going to get? But B, I kind of think the drama around the Fed is viewed as risk there. So I think those are some kind of major things, macro events weighing down the market, and I see it in the numbers too.
Yeah, and to your point, I think the Fed changing hands here in the next few months, the market always will test a new Fed chair to see, are they going to cut rates?
Oh, definitely.
What's going to happen? Yeah. They're going to shake it up. What's it going to be like? I think the jobs picture in general, although we got a good non-farm payrolls headline number yesterday, when you actually look under the surface, a lot of the jobs were in social assistance and healthcare, and majority of the other jobs in retail and manufacturing was up, but very light. A lot of the other sectors were actually slightly down, and it was all there. So I think the makeup of that jobs report wasn't great. And then you take the JOLTS number, which has been the lowest in 4 years. You have a little bit of a tick up in unemployment claims. And then you look at the layoffs. Look at the Challenger layoffs, was the highest in, I think, 12 years in January. I mean, it was a big uptick. So there's mixed messaging in the job market. I think it's interesting that the bond market actually responded today and was bid all day, and yields came down again. So I think we're more in I've been in the camp, I've been saying this on this program for the last 3 months, that I think we'll be in more of a deflationary cycle in 26. I don't see the inflation coming, other than oil would be the only thing that would be geopolitical that would bring inflation back to the upside. But housing starts were weak again today, or existing home sales are weak. And then I think the big picture is core CPI. There's two things that are 55% of that makeup. It's autos and housing. That's 55% of core CPI. And in the auto industry, days supply for new vehicles is high as it's been. So pricing either has to come down or incentive spending has to increase the sales volume. And I believe new vehicle sales was a miss in January already to start the year, and they're projecting lower sales. So I think from a big picture on CPI, the things that drive it, housing and autos, will probably be lower, and you'll probably see services start to fade a little bit more year over year in 26.
Real quick, SPY and SPX are selling off your new low of day. MOC comes out in 20 seconds.
Heard that.
Yeah, I mean, I think the other thing that I want to press on that you were talking about is, if you drill down into the jobs a little more, and I mean, I think everybody's talking about, like, you know, and this is kind of like, I think, a media narrative, like, oh, like, are the numbers real? Like, I hear a lot of people talking about that, but, you know, the BLS, anyone, you know, they're always printing the numbers that they want. That's part of the job. But what I will say is there's all of these, like, stories that I think are legit stories, right? Like, you know, law firms aren't hiring junior associates anymore. And, you know, there's, I'd say, a number of other things, in terms of, like, you know, Amazon cutting 10% of their, you know, corporate workforce, 15% of their HR workforce. And that's one of the things getting automated. Like, we're not necessarily seeing the jobs move, but I think there's a lot more of this, you know, AI job elimination evidence surfacing. So whether or not they've hit the numbers yet, I do think that's coming as well.
Yeah, it's going to be interesting to see. You know, I think it was a headline, was it Microsoft that said it today, like, that these white collar jobs are going to be gone in like 18 months or something like that. Like, that's definitely I think the dynamic around AI just in general is what happens to jobs. Like, we've been talking about that on here. Like, I don't think anybody knows. And all of a sudden, if you start to see in the next 18 months, like, a big spike up in unemployment and, you know, people getting shaken out of the job market, like, AI might sound good on the surface, but it's not going to be productive if people don't have jobs and they don't have money to spend in the economy. So I think that's the bigger AI theme, is like, what is really going to happen in the jobs market? And I think there's going to be a little bit of panic in the markets if all of a sudden we do see AI starts to really displace jobs and unemployment starts to ramp up. I think that's going to start to shake people, and I don't really think the market's ready for that.
Yeah, I definitely agree with that.
Some great points.
Look at these. Look at just drilling.
Dude, we're drilling.
Yes,
I know they're taking it
farther
into the close. What does Frank always say?
AVGO 305 puts for February.
Frankie's
20th.
smiling right now. I know he got short up there.
Yeah,
fucking drill it.
Yeah, exactly. I know how Frankie trades. He saw that. Dude, listen, if anybody was short, I told you 93. That's like a 50-point trade right there in ES.
Wreck it.
If you're still in that.
Will, go look at the Discord chat. Look at that. Someone took SPX right there, 260%.
Let's go.
Let's go. Nice trade.
Nice trade.
220 to 790.
Oh my gosh.
Let's go.
Oh, Nvidia.
All right, stop that.
Wow.
Nvidia drilling still. George, you got any thoughts on Nvidia? Got earnings coming up.
I mean, they're looking really good in the Prospero signals, like better than they've looked in a long time. So yeah, I mean, I feel like it's always worth, like, their earnings are always so good, but like some of this stuff is just like, I remember their last report, they had a fucking amazing earnings. And then there was like some nervousness around some macro data, and they finished the next day like down. And that was a real what the fuck moment. So I think that's the tough thing. And I think Nvidia, more than any company, is a victim of their own success. And it's just like the amount, they don't just have to beat, like the amount that they have to beat for like people to actually like push the stock up is insane. So like that's why I think that's one of the hardest earnings to play, right? Because it's easy for me to sit here and just be like, I double beat guidance up.
Of course. But for the actual price action, it can go up, down, just sideways. Like you essentially have to blow earnings out of the water and surprise everybody in a really positive way to guarantee that this thing actually rips now, right? I get what you're saying. It's not even Nvidia is not alone in that. I feel like we've had to see that with a lot of these companies reporting earnings as well. Like if you don't blow it out of the water completely, you're not waking up in the morning up. It's just as simple as that, really, right now.
I mean, we've been saying in a lot of different ways. The market's changed. Like the market is not like, I mean, we're still in a bull market, but it's not the bull market that we've been seeing. It's like, it's for sure not.
It's more of the sideways bull market, I would say.
A lot of rotation.
Franco says never short a dull market, but that's what we have right now is like that dull market vibe, I feel like. What's up, Will?
No, I was just saying, like we've seen that rotation, and we've talked about this, I think, on here. I mean, I would say this selling that we're seeing, like I feel like we've talked about on here for a while, for the past few months, ever really since October, that I just said, I've been saying, hey, you need to be more cautious, watch what size you're trading, what stocks you're trading, because once again, this movement that we've had in these, they typically, especially in the Qs, they just don't typically resolve themselves to the upside when you get more touches on the weekly of the 9 from a technical standpoint. Like the more, like if you look just on this, right, when we rallied off the bottom, we stayed above the weekly 9 for a long time, and anytime we touched it, we instantly rallied away from it. That's what you want to see. But when you start to see the indexes start to ping pong around the 9, keep touching over and over and over and over, this is not this is not bullish.
Shrink. Yeah,
this doesn't become bullish. It becomes more like it's probably going to roll, right? So I just think this market is giving you ample time to trade out of stuff. And you look at, remember we talked about this a while ago. We talked about Microsoft breaking down back in November, and then that flagged out. We said, man, if Microsoft breaks below like 490s, 480s, like it's going to drop hard. And obviously earnings help that, but still the chart pattern worked out perfectly. We had a big, nice bear flag on the weekly, and boom, this thing gets crushed. So same with Netflix, same with we talked about Robinhood, a lot of these names that have been churning under the surface. So, and now you finally look, you're going to get the Dow that's going to put this candle in on the weekly and having an ugly day after a big look at, Gravestone Doji, another Doji here, and then boom, you get this big washout in the Dow. So I think for now, it's going to be a stock picker's market. We broke this low, retested in the Qs, and now it makes sense to at least hit this equal low here, which is 594.76, and test it. If we take that out, 580 is your target. Has to be. And look what's there. The 200 period. Yeah. You got the 200, you got horizontal support, so it would kind of make sense if we started to drill and open this up. And now you're going to be more negative gamma in the options, so the moves are going to start to get bigger. The more we drill, the bigger the moves are going to be. These 2% days are going to be more common. So you're going to see 2.5%, you could say 3%. Like the intraday moves are going to start to get bigger as we drill further into negative gamma. So,
George, weren't things a little shaky on the option sentiment recently as well when you look at QQQ and SPY? I know. I just remember the last time we were on, you were mentioning they weren't necessarily horrible, but they weren't as high as
No,
they've
they're like
been
low.
traded.
They're like as low as they can go. They've been low. Like they're just sticking to the bottom, basically. Yeah, and that's of definite concern. That's one of the things I'm seeing. And yeah, I definitely agree. Like I was looking at the VIX chart earlier, and I didn't realize, like, yeah, the trend line on it is more concerning than I thought. I forget which one I was looking at, but I was basically looking at, yeah, like, I mean,
then making higher lows for a month and a half.
exactly. Like, and that's the thing that I'm agreeing with your point on, where it's just like, yeah, I think we're going to start to have bigger swings on the days, and I mean, what's tough about this is, you know, I'm staying pretty short, but last Friday was a little scary. Like how big of a swing that was. And those are the hardest markets to play. The one where it might be like, you know, a couple big green or red candles and then just like swinging hard in the other direction. You can't get too comfortable. But
yeah, and to your point, like I'm going back to that last Friday, like we all talked about in here. I think I know Ryan, who's not with us at the moment, but he's probably listening.
He's in the background. He's listening.
Yeah, I mean, like we this was getting oversold, and you can just look. I mean, the RSI was drilled on the hourly. We're going to get some kind of bounce, but where do we bounce to? Right to the back of the trend line. I mean, we literally traded right to it where we broke down from. Here's your breakdown. You drill down. This is the counter trend rally. I said, if we don't break back above, I said this last week, I said the last couple of days, like we got to get back above like 619, 620, and then break this trend line up here, and then you got somewhere to go. And guess what? We never did that. All we did was just grind against it. Then you had the big washout yesterday. You rallied back up, and then we broke this morning. So these kind of moves, like as long as like I was thinking this whole time, like I was adding back the shorts because the trend is down. And I said my stop's going to be up above 620. That's where you got to be, because until then, lower high, another lower high. Now, if we take this out, this is going to confirm this move on a bigger time frame. If we close on the weekly where we take out these lows, you take out 594.
You'll fill that gap that you have to the left.
Yeah. So now you would have, if you take this out, you have this is almost like I would say like 90% chance that you're going to hit this 580 if we close below 594. Because now you got to
pop into earnings,
confirm lower high. So
you don't think we can bounce off the same? You don't think there's a risk of bouncing off the same level as last Friday?
No, you can. I mean, that's definitely a chance. You could go double bottom, but you're going to need to see some bullish price action that develops at that level. Absolutely. I mean, that's I'm not saying that that's not possible. I'm saying if you tomorrow, if we just drill through this and close below 594 on the Qs, your chances of hitting this go up significantly to the 580 if you close below on a weekly bar, because weekly bars have big significance.
Displacement.
So it would be, because now you got like opposing tails, but this is a huge rejection on the weekly. I mean, if you look at this, it's just so perfect how you just tagged it, right? I know it's a little harder to draw here, but let's see. I mean, you literally wicked right into that trend line and the 9 and smashed right off it. And if this closes tomorrow below this, now you're closing below the weekly 21 since we haven't had a close below the weekly 21 since back in April, which was not even this bar, honestly, is here, because these both bars closed above it. That's a long time. We're talking almost a year. This is definitely more bearish in the big picture.
Yeah. Well, I mean, that's how I'm looking at things. I mean, and I don't know what you guys are hearing. I think you guys probably talk to retail investors more than me, but I definitely feel like there's starting to be some more, fatigue and less risk appetite, based on
people are starting to get tired of the downside now. I see it just on the timeline. People are starting to be like, oh my gosh, like, I think this is what the most. Somebody mentioned some data. It might have been you, Will, on like the amount of red days that we've had in the past week or whatever.
Well,
I don't remember specifically what it was.
I talked about that the other day. Is if you look at the volume, I wonder if I can do. I don't know if I have volume on here. Let me see if I can add it. I'll show you. I don't know if it's color.
But yeah, the sentiment is not as strong as it was, like into the end of
out.
last year or beginning of the year, where it's like just buy the dip mode, everybody. It doesn't feel like that's what people are feeling on the timeline.
If you look at this real quick on the daily, when you have distribution at tops of moves, what you see is when you do have red days, like look at the red days, the volume's higher, right? Volume higher volume. This is what is where you see like institutional distribution is they bring you back up into liquidity and then they slam it and they got high volume. But look at your up days. Look at this. Half the volume here. Friday,
it's interesting.
Close, but most of this over the past, like look at the red days are much more strong, which tells you that there's more distribution going on in this profile. It's more sell side than there is real buying. Versus like when you look at bottoms, like look at bottoms, you have massive green bars, right? Huge green. Green. And
Rivian up 8% earnings, by the way.
There you go, Rivian. Pull that up.
I mean, the reason I bring up the retail thing is when I was looking at the market this summer, like May, June, I think that people like institutions were still more nervous about the tariff situation and weren't piling back in the same way. But retail was buying the dip. They were as optimistic as ever. Things rebounded. And I think that was one of the months that like Tesla had like the most like retail trades it's ever had. I think that was May. But I just don't see that. Like, I don't see retail coming to save this market in the same way that they did this summer. And I do think institutions are following retail more and more. But that's why I brought it up, because I just don't, I think that people are finally are finally seeing this as like, maybe this is the top, not like buy the dip, whatever.
Well, I think George, your point now, retail, if we do start to get some more aggressive selling, retail is going to puke it up. That's what's going to happen. And you'll see like institutions have been distributing in the last 2 months. You can see that just kind of in that volume. But I think that's exactly what will happen is now everyone's going to say, uh-oh, like we didn't go higher here. And now we've broken trend. Now you're below the 50 on the SPX and the NDX. So now people are going to say, okay, the rallies from here, I think, will get sold in the near term, especially if there's any catalyst for something in Iran or something else that happens. I mean, just throw that. Those are geopolitical risks. We don't even if something happens there, market could go a lot lower.
Even if nothing happens there, we're probably looking at a pretty big correction.
Right. I think so on the big time frame. I think you could this could be more like a 2022 where we stair step our way down. It's not like panic selling where you get a V bottom, but like I think on the weekly chart, I've been saying this for a while. I think a healthy correction is back towards that 6150. Right to this area, you got a nice support levels. It would kind of clean up a lot of this action, and now you're breaking this rising wedge. I've been saying this, especially in the S&P. When you look at a rising wedge, you don't ever see them get in this pattern like this and then break to the upside. They don't do that at tops of moves. They typically, you start to get these indecision candles and then they roll. That's how they kind of roll out of them. So rising wedges at the top of moves are not like, it's not like a flat ascending trend line like this that you're going to blast out higher. It wasn't like that. We've been doing this, and then all of a sudden you roll. So I think you could kind of stair step your way down towards that 6150 level. Maybe it's over the next couple months. I mean, we've had bearish divergence in the RSI since September forming, and I've been talking about it for a while. So they just take a long time to play out on the big weekly time frames. They take 3, 4, 5 months, but eventually those divergences usually catch up and they start to form, and then the once they start puking up the big mega cap stocks more aggressively, and they all kind of get in sync, where Google's selling, Apple's selling, Nvidia's selling, Amazon, they all sell. That's when you get the broad indexes that start to roll over in a more meaningful way.
Rivian now up 12% from $14 to
Woo!
$16.
Wow.
Also, Applied Materials, ticker AMAT, up 10.5% after hours as well.
Wow.
362 for AMAT. Wow.
Rivian missed on EPS and beat
Did
on
they?
revenue. Honestly, their earnings numbers, they're not fantastic whatsoever, but stock is up like 11 to 12% right
See,
now.
this is the earnings environment we're in. All the stocks we love that hit a bang in earnings are moving down, and then freaking Rivian, which I know some of us love, but like coming out
Dude,
with the
they're-
half-assed earnings, and they're ripping. It's just that's the market
they're
we're in right now.
EPS, Rivian EPS 0.54 versus 0.68 estimate.
Bruh.
Revenue
are we doing?
1.29 billion. Estimate was 1.26 billion. So I mean, a little bit.
And they fly like
Like
just
they're
Crazy.
the
What's
numbers
going on?
that came in, they're all like it's kind of expected, like nothing spectacular, but stock is up,
yeah.
12%. It is crazy.
What were you asking,
Anything-
George?
What's
Anything
going
could
on,
happen.
man? Like, does it say any scuttlebutt on like what's getting people excited about the earnings?
I'm trying to find something about this. Right?
Wait, Will, didn't you
Weird.
sell a put credit spread on
I
Rivian?
bought a put credit spread that is currently going to be in the water.
Oh, you bought a put credit spread?
Yeah.
It's okay.
Ticker
was thinking that-
Pinterest as well is almost down 20% right now.
Oh boy.
And
Oh,
then
Ooh, ouch.
Yeah,
Down to
and
15
the
bucks
other
here
one
today.
is Dutch Bros. Ticker BROS is ripping up 13.5%.
That's the coffee joint, yeah.
Yeah. And they did actually have a good earnings, it looks like. So that one makes sense. Well, looks like we need to get on Prospero and look at the option sentiment on
Ooh,
some of these names
Coin-
that are taking a dip.
Coinbase.
What are you doing? What do we got?
Coinbase
Rug.
initial reaction downside. I just saw from
Oh.
Financial Juice. Where's
Oh,
that?
it's down
Jesus.
5% on top of the 8% it closed down. Oh,
Oh,
Coin-
that is a level they did not want to break, because if you look at this chart on
Whoa.
Coinbase, well-defined lows here at the 140.
Dude, no. Do you
level.
see their numbers? Do you see that?
no.
Bad?
EPS
I don't see him.
minus 2.49. Estimate
Ooh.
was 0.96.
They missed. Wow, they missed
They're-
across the board.
Their
They missed
revenue
that.
1.78. Estimate was 1.83. That's not
Look
not
at
good
the
earnings
total.
from.
I bet you
From Coin.
MicroStrategy probably not loving that either. Nope. I mean, I'll
No,
tell you what,
definitely not.
Coinbase at this point, if we rally back up, I'm just going to give you a trade idea. If we rally tomorrow back to these lows of like 143, I would smack it short hard, because now you're breaking below this upper, this whole upper distribution area, and now you're breaking this. I think your next level is 114.
Coin brushing off a 359% miss. that's
That's
ugly.
Damn,
ass
that's crazy.
number.
Coin just broke lower than Liberation Day.
Oh, really? Is that where we're at? Oh, shit.
Yeah.
I'm not
they're
even looking
busting
back
through-
that far.
they're
Dude,
busting through
Coinbase-
that low.
Yeah, look at Coinbase on the daily chart. Like, this is ugly.
Like this thing,
Honestly,
I'm gonna tell you right now.
115, just $20 lower.
Yeah.
Wow.
right here. I think if this breaks, I mean, if you can get a counter trend rally back into the low 140s, I think you slap it short. That's what I'd be doing. Right into this, you got a ton of overhead supply here, and now you're breaking below it. You rally back up to it, and then you send it lower. Maybe we get
Net
to
is out as
46.
well.
Coinbase
What is it?
hasn't been this low since 229.24.
Wow.
Here's the other thing.
We're hitting some historical levels.
Look at Bitcoin's just another. Is that another bear flag after the rally? Probably.
Looks like it. Not really setting up bullish structure at all yet, at least. You
Let's
know what
go
I mean? We're in an
Nice.
area that I like, but it's just there's no real
Yeah, but
buyers.
Crypto is
I
in
like
I think the problem with
absolute
Bitcoin
gutter.
is it can fall so much further than every one of us thinks. You might say, "Oh, it's 65." This thing could go to 10. Like,
yes, it can.
I mean,
Yeah, I mean,
down here.
there's always the risk with it, right? There's not
Yes.
like you can't be like, well, now it has a good PE ratio, right? There's nothing like
Correct.
Well, and everybody here's what the argument was, George. Everybody thought, oh, banks are buying this, like bigger buyers are buying this. I heard the argument across the board saying we can't drop below 80 or whatever the number they throw out because of this. And I never subscribed to that argument because it's like, look at the market we've had since inception. Banks and hedge funds, institutions have been a part of the SPY and QQQ forever, and they let 20% corrections happen there. Why would they not do the same thing on Bitcoin? Right? It makes no sense to me. Like, why would they not do the same thing in another market? And to me, it's just like you can't argue that that's not going to happen no more just because big buyers are stepping in.
Check this out on Bitcoin real quick. This was a Head and Shoulders top that broke, right? So rules of Head and Shoulders technically is you take from the head to the base to the neckline, which let's call it here. And then when you break, you should fall by that amount. That's roughly 48,000, something like that. So if we're breaking this level, which was, call it 85 minus 40, that puts you down here somewhere. Just from that standpoint, if this is a Head and Shoulders break, which it is.
And I would say
that's your measured move.
I would say talk about the perception too. Like other dips, I talk to people in the crypto space, and they've basically been like, no, like we're gonna rebound, like more confidence, like. But I've been asking people about this dip, and they're just like, pretty much everyone says it's further down to go. Some people are given like higher levels of support, but almost no one I've talked to in like the who's on like the quant side is saying anything but there's more down.
Right. And honestly, it's hard to know because if you start going a lot lower, like aggressively, again, retail, people are going to start puking it up. And then that's when the selling really, we haven't even really, it's almost been, I mean, the last couple of weeks on this bear flag break has been aggressive, but like it's somewhat orderly. Like, but it could get, like, you could have a day it's down 15-20%. Like, we haven't seen that yet. And you certainly
mean, also, like, just throwing this out there, like, Saylor says that he's got room, but his average is 76K, right?
I think they're going to test him. I think they test them. That's what I think.
Yeah.
That's a crazy
Hold on, guys, real quick. Hello, this is Margin Desk. Is this Michael Saylor? Yeah, you're being called.
Seriously.
Yeah, like especially if they start getting nervous, and if Saylor gets margin called, like that's where you're talking about like maybe 20K. Like I have some people saying 0. Like if it goes too far at 0, it's like come on, no. Like I'm taking a Bitcoin position at 10,000, right? Like that's where if it gets to there, I'm buying. That's my value estimation. But like,
it's funny because I think I sent KC this link last night, or I think I tagged him in it, of Saylor like basically saying, well, like if we'll just issue more debt and we'll just buy more Bitcoin. They're like, okay, but like, what if the banks won't lend to you to buy more Bitcoin because you're so underwater? Like, who's going to lend you the money? Oh, well, we're just going to get it. The Bitcoin can't go to 0. I'm like, as soon as you start saying stuff can't go to 0, like, somebody's going to put pressure on you somewhere to test your willpower.
Yeah. Well, it like those like and this is so like what fucking banks do, right? If Saylor even tries to go to them and says he needs money, what's the first thing they're going to do? Short the shit.
Yeah, they're going to sell the other side. You got to sell the counter risk, right? Like
it's going to be like you're coming to us for money, like let me triple my short position right now. Like
yeah, they're going to have to go. So if you lend them money, just like they've been doing with some of the software names like Oracle and stuff, they're going to have to go out in the credit default swap market and instantly buy CDS on that loan because you have to hedge it somehow because it's such a high risk.
Mm-hmm.
Yeah,
which
it's a crazy world we're in right now. Jeez.
I mean, and that's what's like that's what's so interesting about the markets, right? When Trump got elected, like all we heard was like golden age of crypto on the way, right?
And Bitcoin is like, even last year it closed not up much, or I don't even know what we closed at. Did we close? What did we close on Bitcoin last year? Let me see.
I don't know.
I'm curious now.
But
we closed
go ahead.
red. That's all I wanted to see. Is like we didn't even close green on Bitcoin last year, and then we're starting this year down. What is this like? 25%. That's rough.
But that's the other wild card, and that's an interesting question. At what price does the U.S. government say they're buying Bitcoin?
Yeah, that's a good point, George. I don't know.
There were a lot of voters that voted Trump in, like on crypto, like
They won't tell us that until after it bounced 50K anyway.
Like, there's got to be a price where the U.S. government buys.
Yeah.
Well, the other thing, I was just looking at this, but look at a company like Blackstone, which continues to. I mean, believe it or not, this thing's trading back to the April lows in the private equity space, and these private equities names. KKR is another one that's been getting smashed.
Both of those have been garbage in the Prospero signals for a bit.
Yep. Ares Capital's another one that's in that space. Main Street's a little bit better, but then when you start looking at the just the BDC income ETF, which has a lot of those names in there, look at how this thing is traded since really December. I mean, you're back at the April lows in this space, which is not good. And this is a proxy for risk in the middle lending market. So I think under the surface, I think I talked about it back when we were trading in October and we started to see some hiccups in the market. I was like, man, look at these private equity names getting really crushed. And then they recovered. And then in the last month or so, they've really started to fall apart again. And I think that's where we're seeing more volatility in the market because under the surface, there's some other areas, other sectors in the credit space. And what's interesting is credit spreads still are relatively tight, are still tight. And obviously, if treasury yields start to fall and high yield does not come down with it, the more that treasury yields fall, high yield will mechanically widen on its own. And that's going to create a little bit more credit risk just automatically because yield spreads will widen as treasuries go lower. So that's another reason that you can put pressure on the indexes is credit will start to widen out slightly as treasury yields go lower.
Yeah. I mean, and I think the big thing that you have to look at in all of this, and it really supports what you're saying, is that you take AI out of market growth. We're not doing that well. When you take, I think the whole market's negative, like the last year, if you take out AI. So I think if we were seeing it kind of goes back to what we were talking about earlier. If we were seeing these good earnings reports and, the companies rallying from them like they were a year ago or whatever, even if there were some blemishes, I think I would say the AI trade is still live, right? But I just don't. That's not what we're seeing, right? Not only is the AI
the price
trade
action tells you differently.
Yeah. Not only is it not live in the same way, and I hate to say bubble, but it's also we're also I think getting to a point where think about what the Gemini, what was it, Genie headline did to AppLovin and Unity. So not only do we have that kind of I would say more bearishness with AI in general, we now have kind of the big three cloud providers putting pressure on the rest of the businesses, and that's not a zero-sum game.
Correct.
Google gaining because of Genie was not equal value to what was lost. Right? Yeah, Google's going to win, but that's definitely not zero sum. So I think both of those are downward pressures because I think, the big three are going to continue to pull away from everybody else in AI services, especially.
Well, the thing is because just like I used this analogy, I don't know, a month ago or so, we were talking about social media when you looked at back in the 2000s, you had, High Fiverr, you had Facebook, you had MySpace, you had all these names. But what survived out of that? And it's going to be the same thing for AI. You're going to have an enterprise player. You're going to have a consumer player. Maybe that's Gemini with Google. Maybe that's Microsoft and OpenAI. But all these other names, they're either going to get bought or they're going to go down. They're all not going to make it. And right now, you have a lot of these companies trading like everybody's going to make it. And it reminds me of 2000. Like there's going to be winners and losers, and there's going to be a lot more losers than winners. It's going to condense down to a small amount of AI players. It's a technology that's going to be here. It's something that's going to stay. But the big companies, the hyperscalers, are the ones that are going to use it and win, and everyone else will be gone, in my opinion.
Yeah, and I think that's why hardware is the bet, right? And I was listening to Iron like on their conference call, and as they were getting hammered, by the way, but like the point that they were making really resonated with me around like they were just like, look. Actually, the most important thing that we have access to, yes, we have, we've got financing for the compute and the data centers or whatever, but we have power locked in. Yes. And I think that's like, if we do start to enter a wider correction, that's what I'm really going to be looking at, shit like that. And I think Iron's going to be a buy. Like Iron's getting hit hard because of crypto. And I definitely think, them, Cypher mining, there's going to be really good like opportunities to buy those if we do get a correction. So, I'm not fearing a correction that much for that reason. As always, it'll present great opportunities.
Yes,
100%. Yeah, that all set up. What a day, y'all.
MBIS is another one. Like, obviously them and a lot of others. Yeah. Oh, are they? Did they report today? I thought they were reporting this week.
They reported this morning, I believe. Yeah, this morning is a double miss.
But they're up.
26% on EPS. Yeah, but they're up, right? I know. It's just, again, that is the market we're in, right? It's ridiculous.
I mean, I just had this chart up here just from to what you were saying, George, is like when you look at like AI driving a lot of the growth, like I have the XRT, which is the retail ETF. I mean, we're basically not any higher than we were in September. We're actually lower at this point. And you start to say, well, obviously some of that's Amazon, right? Because Amazon's a big weight in the XRT. But retail has done nothing in 6 months. I mean, we've gone absolutely nowhere. And now, if anything, this is a nice little head and shoulder setup from a pattern. And you start breaking below here, retail is going to fall apart. So you just have so many sectors outside of the only thing that you're seeing right now, utilities, real estate, and staples. They're not going to hold the market up. It's just not possible. So when you have all the other sectors that don't, the banks just broke the 200 on the XLF. You got technology weak, you got communications weak, you got discretionary week, and retail starts to become weaker. Like, where's been what was up today? The long bond up. Look at this thing. The 30 years flight to quality. I mean, a breakout over this level. I mean, yields. Yields on the long end. Look at this. They were 493. We're down 20 basis points in the last 6 sessions. So I think it's just more of a risk off tone. I think you can pick your stocks you want to be in, go shopping, and just right now you don't have to be a hero. Do not overtrade. Scale down your size and look for opportunities. Wait for stuff to get to the right spots on the charts or companies that you like from a fundamental perspective, and go in and buy those names or start a position in those names. Don't get super aggressive. Don't go all in right now, because we may not have a V bottom like we've seen so many times in the last few years. This market in 26 in the first half, I think, could be much more like 2022, where we kind of zigzag our way down and we get, some bounces, but then rallies get sold. And it might take, 2, 3, 4 months to try to reset before we can make a next move higher. See what the labor market looks like, see how much inflation's cooling, and then maybe in the back half of the year we get more rate cuts and maybe a little bit more stimulus from the government. So I think that's what I'm looking at to trade. That's kind of where I'm at.
I agree. I think the Fed changeover, it's kind of funny. I mean, and Trump, I said this on a live stream a few weeks ago, and then Trump came out and said it. Like, for all the like the hand wringing about the guy being like hawkish and all that stuff, like there's no way that Trump put someone in there that isn't going to cut rates. Like, I don't believe it. Like, they're going to like, they're definitely going to want to sell the impartiality as much as possible, but I just don't buy it. Like, I think we might be getting like a 0.5% cut, like right off the bat, first cut when this guy.
I agree, because it just doesn't make sense that he would put somebody in that wouldn't do that. So
we know he wants that, right? And like, what are the chances, like, that, you know, if it was a different president, maybe you just like pay some lip service to them and then you go in and you cut what you want anyway. That's not how like people deal with Trump. So like
George, you know what though? I think that the data is going to support cuts sooner than we think, and I think a lot of that's going to be driven by the actual inflation numbers year over year over the next probably 2 quarters are actually going to start to come down, and it's going to be driven by housing and autos and the things you said. As long as oil stays tame, I just don't see where the inflation is going to come from. It's not going to be on the good side. It's not. I just don't see it. So if it's services that starts to come down, where, you know, is auto insurance going to go up another 30-40% this year? Probably not. It's probably not going to be in
and auto, like insurance is getting price depressed by like there's a lot of startups coming in, cutting out the salespeople and doing insurance. So yeah, I wouldn't bet on insurance going up at all. I'd bet on it going down, actually.
Right. So to your point, I think by the time we get to the middle of the year and we have a new Fed chair, I actually think the data, and if the jobs market continues to show, you know, lackluster and JOLTS continues to be soft, and if unemployment claims start to rise at all, I think it will be, I don't think we'll be at 2 cuts. I think we'll be looking at like 4 cuts this year. I think you may cut 50%, or I'm sorry, 50 basis points in June, and then depending how the back half of the year goes, I just don't see that rate cuts are going to fix the job. 50 basis points of rate cuts is not going to fix the jobs market by any means. It's not going to. The only thing that's going to help the consumer is the long end of the curve falling, and we've seen that in the last couple of days. But even mortgages coming down another 25 or 50 basis points, I don't think is going to be like red hot for housing either. Prices are still very elevated for housing. And again, we talked about this yesterday. The average first-time homebuyer age was 42 years old last year.
Oh, I know. It's getting fucking nuts. It's crazy.
It's crazy. And the average homebuyer out of all buyers was 54. So the young generation, even if we get 25 or 50 or 75 basis points of cuts and mortgage rates in the mid-5s, the prices still have to come down to have real.
I mean, ask me if I'm thinking of buying a house anytime soon. The answer is no, and neither are any of my friends or anybody my age that I know. So
that's my point.
I guarantee that's not even a thought in our mind, because prices for one, and then for two, like just doing that in general right now, it's something kind of the past. So I just had go ahead.
No, I was going to say the only people like I really know that have bought houses, that are younger, are people whose parents are like expanding their real estate portfolio, and that's why that age is going up. But no, the other thing is, I was saying that I think 0.5 in June is table stakes. Like, if it plays out like you're saying, which it definitely could, and we have some deflationary pressures in like areas, and that's accelerating, I think it could be a full point. Like, that's the range that I would give. And I do remember Trump saying at one point he would advocate for a full point. So I would not be surprised to see that. And like, I was also agreeing with you when I said that, where it's like, yes, I think we can get another 3-4 bad months and then just like get a big cut and the market just shoots back up again.
Yeah. Yep. I agree. And this could be a counter trend. You know, we get a lower move. Maybe it's a 10% correction when we move S&P down to 6,100, which I think is the right area, at least for a big level of support. We see what we do there. And maybe we get the counter trend, and if things look good and the economy's still rolling, then maybe we get a move into the back half of the year that looks pretty good. But like, I just had the 2-year. This is a chart of the 2-year yields I had pulled up. And if you look at this chart, like on the weekly, it's a big dome top. And as you continue to make lower highs, like this thing is just on the knife's edge of just, if they do cut rates, the 2-year yield's going to slam lower, which is going to be on the short end of the curve. You could get some steepening where the short end comes down and the long end stays elevated. But right now, the whole curve is flattening is really what you're getting. So I think that the inflation fears are probably overblown. I keep hearing, oh, inflation's going to tick up. I'm like, I just don't see where it's going to come from. And oil in the 60s is not inflationary. As long as oil stays below $70, like I don't see where you're going to drive a ton of inflation from. I just don't see it.
Well, I mean, I think that's the prime risk is tensions flaring up. I
Sure.
think that's the biggest inflation risk right there. Like you named it. I mean, I also think that if there does start to be more earnings pressure and worry, I do think there could just be like prices being raised on goods just as an insurance to like, because of the problem that we're talking about in terms of the demand for earnings. I mean, I was doing it last quarter. I haven't looked at it this quarter, but 87% of companies beat last quarter. And I think the pressure to beat now, I think puts pressure on, trying to raise prices as well. But I don't think that's a big risk. I agree we're going down, but I think that's the other one. If companies start to feel a lot of pressure to protect their stock price, they might try to, improve margins.
Right. And that's if they can pass along price increases will be the big question. And how much will we see in earnings growth? Now, on the flip side, if we do stair step lower and we get to these lower targets, the hyperscalers are still going to spend massive capex, $130 billion in with Meta. You got a couple $100 billion with Google and Microsoft. I mean, they're still spending massive amounts of capex, which should feed into obviously the hardware space, the memory names. So that spend isn't going away. So it's still probably going to feed into their earnings over the majority of 2026. But the names that get the most beat up are in that space. So the names that I'd be trying to go buy, because that spend is likely still going to be there unless there is some kind of shakeup where these hyperscalers start to pull back their capex. And then that would be a big red flag for AI. If they say, hey, we're going to scale our capex spend, it's not going to be this much, we're thinking of dialing it down, and we get anything like that, that'll definitely spook the market.
Well, that's a death spiral for the market, but I mean, the thing, the Burry thing does make sense. It might not be their choice. That's the thing that I'm watching. Like, at some point, if they're going to have to depreciate the existing chip inventory, right? Like, I think what Burry's saying makes a lot of sense, especially with Moore's law. Like, obviously, the faster this stuff accelerates, the faster the existing technology depreciates. So I definitely see that, but with things of that nature, you really never know how long places can kick the can down the road on that. And that's the kind of thing, if we had an SEC that actually cared about enforcing shit, I would say that's the biggest risk. But they might just continue not to properly mark those assets. But if something causes them to, I'd say that is the biggest risk, because if they don't have to properly mark those assets, they will have to trim their CapEx budgets, if only just to save some face with earnings as they take those depreciation expenses.
Correct. Right. And that leads back into the private equity conversation, because what are these assets worth in the private equity space? We don't know. I mean, we saw Blackstone take, 19% haircut on one of their funds. And what are these assets in the private equity space worth? Nobody knows that right now. And we don't know when they're going to come out and say, well, hey, we thought it was worth this, but actually it's only worth 50 cents on the dollar. And that could be the other thing that drops is financing for the continued CapEx, because you're going to get less and less people saying, hey, where's our return? We need the ROI. And the further that AI gets pushed out, where the revenue streams from AI just keeps being pushed into the future, at some point, the banks and the private lenders are going to say, okay, I'm not going to lend in this space anymore, or I'm going to lend at a much higher rate, and it's going to start to cost them on the interest side because they have to pay so much to borrow the money to spend.
One of the things I was just looking at, like, when you think about the other big CapEx spenders, you know, obviously they're doing some big things in generative AI products, but I was like thinking about like, what is Meta's plan with all that spend? Like, I know they want to have like an AI assistant,
Sure.
but they're pretty like in terms of what they have in market and their spend, it's pretty like it's a pretty big difference versus the other ones.
Yeah, I don't know. And the question is like, with Meta, like what are they going to do for revenue generation from AI? I'm trying to figure out where does the revenue come from that we need AI for Meta. I mean, I'm looking at their products. You look at is it I got to figure out, is it a service that the average consumer is going to want to pay for to use all the time? I get it more on the enterprise side. On the consumer side, how many people are going to pay 30, 40, 20, 30, 50 bucks a month to use AI? I don't know. And I think that's the question everybody's got to ask themselves. When you look at OpenAI and their revenue stream, that by 2030, they're going to be what, $250, $300 billion? And they're at 13, I think is the run rate, of 14 billion, and they're burning $8-9 billion in cash. You got to get I mean, it's a big number, and it's not that far away. It's not like we're talking 2035. You're talking like 4.5, 5 years. You got to get to 250 billion in revenue. And I'm trying to figure out how they grow to that revenue stream.
I mean, they're going to roll out ads. Like, I don't know how much that's going to do, but
yeah, but my point is someone's got to pay for the service. And it's not, it can't be like for Meta or Google or Amazon. It's just an enhancement, right? There's got to be an upside in the revenue stream to say, okay, I mean, maybe I guess on Google, it's like, hey, because they're going to use AI, it's going to target customers better. We can charge more for ad spend, maybe something like that. I could kind of get that revenue stream. But is the average consumer going to say, hey, I'm going to go spend an extra X amount of dollars to use AI? I don't, at least maybe not yet. I don't know.
Yeah, I mean, that's what I was kind of getting at, where it's just like, if you're spending, like, I think Gemini has huge revenue potential in the B2B world.
Sure. 100%.
But like, yeah, like, how good of a fucking personal assistant does Meta have to build for people to pay that money? Like, I just like, that's a big bet. Like, that's why I'm just like, is there something else there? Right? Because like B2B, like, nobody's paying Meta for their personal assistant. Like, I just don't see that happening on the B2B.
It's going to be an included service. That's what it's going to be.
Yeah.
It's going to have to.
Yeah, and then like maybe it's like to serve more ads more efficiently, and like actually as we talk about it, I could see some potential in like a rev share of the products they deliver. But like the margins on those like B2C like Amazon type products are so small already. Like, a small rev share isn't going to move the needle, but like, that's why I wonder, like, are they still thinking about the metaverse? Like, they have the VR, like they have the VR play. Like, that's what I come back to. And maybe they just don't want to talk about it because they got so much egg on their face the first time. But like,
Sure.
That's the only thing that I can think of, that they still want to make a big metaverse play. And they think they can like basically take a cut of all these metaverse transactions that take place there. That's the only thing that makes sense to me for all this spend.
Yeah, I guess, but even still, it goes back to how much ROI are you going to get on that? That's a lot of spend. It's a lot. And it's not like it almost seems like it's perpetual in the fact that it's like, what, next year they're going to spend another 150 billion and another 150 billion. Like, it's a lot of spend. And at some point, like, another 18 months, 24 months, I really think that this AI play in general, you're going to need to see the return start. You're going to need to see some profit from this, right? Like, you have to, or
ROI.
You can't just keep pushing it out to, it's going to be 2030 and it's going to be 2035. And it's like, okay.
Because that just becomes a snowball effect of
exactly.
People and then people.
No, I mean, especially Zuckerberg is going to be on a tighter leash with that shit. like with Wall Street, like maybe retail, like, but like if he's still sitting here in a year and he doesn't have like a revenue producing like, AI product, and he's still trying to spend the same amount on CapEx, I gotta think people are going to short the shit out of Meta.
Yeah. Well, look at back in was it in 2022 when they had all these losses in Reality Labs and they were getting crushed, and the stock went from 300 I think down to the 90s. That's kind of what you saw.
That was it. Like
the big expenses.
That's why it's so odd that after like Zuckerberg saw what happened there, like he seems to be going down that road again. I mean, not in the same way. Like that was much more of a moonshot than this, and like everybody's spending on ad, so it's definitely different. But the amount that he's spending relative to the current revenue of his AI products, I can't think of a more askewed company than Meta.
Yeah, I would agree. And the fact is, as soon as any of these hyperscalers decide that they're going to just trim their CapEx, it's going to create a snowball effect in all of the hardware names, all the memory names, and anything in that space. Because if they think that they're going to cut their spend on CapEx for AI at any capacity, all those names are going to get hit dramatically. And if one does it, then it'll be another one. And you know what? If any of these stocks, let's say it's Meta or whoever, if they get dinged for so much expense like they were a few years ago, if they come out and say they're going to cut their CapEx on AI and the stock goes up, you better watch that the other hyperscalers will follow, because if their stock's getting destroyed because they're spending so much money and they don't have the revenue stream, I think that could be you could have a knock-on effect in the whole sector. I mean, that's obviously big picture, longer term, but there definitely needs to be in 2026 going into 27. The big theme is going to be when does the ROI really start to show up in the revenue stream, especially on the consumer side.
Yeah, I completely agree. And I mean, I think that's kind of, we're talking about Meta, but I think the other name that I think of there is Tesla, right?
Yeah.
I think that in a very different way, Tesla's going to have to start showing, FSD revenues. They're going to have to get closer to shipping the Optimus. Like at the very least, maybe some partnerships, maybe some forecasts of units being sold. So I mean, I think that is another reason that we're sitting and having this conversation about this correction coming. I think if a lot of this spend was closer to ROI, we would not be seeing these same sensitivities in earnings. But it's kind of like a theme. The only places that are still, kind of booming are the places that are just receiving the CapEx money. But you see people a little more even skeptical of that now because of this kind of I think concern of maybe you're going to have to pay the piper at some point.
Yeah, no, you're exactly right. You're dead on the money, I think. But it's I think just to the point in the correction is you have this churn under the market, and the market starts to try to figure out, and I think Nvidia's earnings coming up here will be obviously important. They have to double beat and raise and all the rest of it, or I think they get punished. But the churn under the market now, especially after today's move, where the NASDAQ, the S&P, and where are we at in the Russell here? At least the NASDAQ and the S&P now below the 50, the Russell below the 9 and the 21. Your standout, your last man standing is the Dow stocks, which is only a handful. But if we start to break down,
which has been ripping all-time highs.
Right, but then you look at the Dow, and then you look at the transports today. They just basically big bearish engulfing gave the entire 3-4 days back. You're starting to see, like I said this a few days ago, when you see everything start to participate and start to get correlated to the downside, not just on the total chart, but on the same day where transports are down, Dow's down, Russell's down, S&P. That's when you're going to get renewed selling, and now it's probably where we set up to take that next step lower. From
Yeah,
here.
we'll see.
So
I do gotta get wrapping up here soon. But,
yeah,
this is a great conversation. I
Yeah.
love hearing you guys go back and forth. George, love having you on too. Just getting more perspectives and thoughts on everything. It's always a good time.
no,
You
it's
should come
great.
on, and anytime chat with Will. Will's on here all the time, and you guys have great conversation. I love hearing you go back and forth. It's awesome.
Yeah, it was a pleasure, Will.
Yeah, absolutely. Love doing it, and we'll be with you guys tomorrow's Freaky Friday. Don't forget
Freaky
that-
Friday, baby.
But not just any Friday. It is Friday the 13th. So
Yes, and
who
CPI
knows?
Friday. Oh boy,
CPI Friday.
That's a weird
Friday the
combination.
13th. Who knows? Maybe we're gonna see some fireworks, but I would expect tomorrow. Get ready for some more expansion of range. I think you're going to see some two-sided trade, but we're definitely. I think you get another big candle, probably in one direction. But I would look for those. Look for the Q's lows at 594, and then an SPY on the way out. Look for that equal low maybe at 675. So that's kind of the stuff I'm looking for tomorrow. So be ready, be on your toes. It's gonna be a fast market, I guarantee it.
Yes, sir. Gonna be fun. Hey, George, really appreciate you as well. And make sure everybody in the audience, it should be pinned in the YouTube chat still, but the link to go download Prospero, everybody should get on there. Something I'm always looking at, especially in these dips right now. This is the time to be on Prospero and just looking.
Yes.
I mean, you can look at a ton of different signals, but we mainly focus on that net option sentiment, and just seeing what stocks are holding that strong net option sentiment during these dips can be key, because it's telling you, hey, hedge funds, bigger money is still interested in this, even on the dip. So I would jump on Prospero. All the names you guys are technically looking at that you might want to, take setups on, I would run it through Prospero first and just see what that option sentiment's saying. It might give you a little extra tell. But George, you got any other last thoughts before we get wrapping up here?
Yeah, I mean, what I always kind of tell people at the close of these, anyone interested in learning more about Prospero, hearing our take on the products, getting some free trials, you can always email me, George at prospero.ai.
Awesome. Well, big shout out to you. Will, shout out to you as well. I know you've been on these streams a lot more recently and just helping us out and staying on during earnings, everything. I appreciate you, my man.
Yeah, and great conversation, George. Loved it. Love the product, and look forward to having you on again.
Yeah, thanks a lot. Talk to you guys later.
Talk soon, boys. We will be back bright and early tomorrow morning for everybody. So we'll see you guys for Friday. No spaces, just the stream. We'll be on early.
CPI
it's gonna be
Friday,
a great day
baby.
with CPI. Yes, sir.